Okay, now I am. So Lewis had asked about how about Visa? Visa, around the 150 level. So first thing I just put up here, and we can adjust the strikes. Here's a potential setup if you're willing to be long Visa stock. Again, taking the risk to the downside, knowing that this is not a perfectly risk-defined trade. But if you want to get long Visa stock, here's a potential opportunity where you can collect about 250 bucks, okay, each time you do this, okay, with a risk next Friday at expiration, a break-even risk at about 141 or so. Obviously, Lewis, if you want me to look to adjust this, we can adjust it higher up to that 150 area you're looking at. But this gives you, about a, 13% decline down from here. Okay, you got it? Awesome. Okay, Raj, what do you want to look at in Microsoft out to September? Tell me what your thought process, what your goal is. Okay, so what do you want to do? It's definitely not historic low. Let's be clear on that. It's not historic low by any stretch. So what are you looking to do in September, Raj? Do you want to set up a position like this going all the way out by creating some sort of put spread like this? That I wouldn't recommend doing. I would not recommend tying up your capital going that far out. You want to buy call options? I wouldn't do that either. Unless you did some sort of spread. I would not naked buy call options. Because unless you get a complete massive move, you're going to get obliterated on volatility. Now, you will, if you buy calls and the stock goes up enough, you can make money. But you're going to get obliterated on volatility. Okay, who's next? You bought Pepsi yesterday, Raj? What did you do that you're up money today? What did you do that you're up money? Raj. Okay, QQQ. Andrew, while I'm waiting for Raj, let's look at QQQ. You're looking for Qs to the upside, right? Okay, so let's say you go out to June. Amazon is absolutely another one, Chris. Let's do that one right after I look at this, for sure. Okay, what is your outlook, Andrew, in the Qs? Okay, so basically you're looking for about a $50, that fair? So back to like 230-ish, that a fair assessment? Okay, so go out to June. I mean that's a pretty darn big retrace, comeback. But man, there you can really, if you're that aggressive, you can probably find some really, really sweet trades without having to get, real fancy. Here's a $20 call spread, 210, 230, that you can pay, somewhere $3.50 to $4. Phenomenal reward to risk on that. Adjust your strikes from there, but there's at least a kind of a starting point for you. Okay. Yeah, you will get hurt by volatility here, and that's why I would try and mitigate it by turning it into a butterfly or some sort of unbalanced type of position. But if you get that big of a pop, though, Andrew, the volatility is not going to matter. Okay. However, the volatility on that particular spread in QQQ, you are long. You're long some decent Vega there, which I would be afraid of. So what I would do then at that point is maybe turn this into a broken wing, exactly, or even an unbalance now to the upside. An unbalance to the upside. So here's that same, $4-ish range, $3.50 to $4 that we were just talking about. But what I've done is widen out your spread now. Now you have a $25 wide spread. Okay, $25 wide spread. You will have some risk if this thing totally blows up on the upside. However, if it does, volatility is going to get absolutely crushed and you'll have opportunity. Now, the downside to this, Andrew, and I love this position, and I'll plot this out for you, and all I can do is plot it out for you, really at June expiration. Okay. Here's what it looks like. here's your sweet spot. You would start losing money if it goes up to 245, 248-ish at June expiration. But you would also capitalize at that point on a lot of short volatility. However, the big downside to this is, and maybe it's not for you depending on what you have in your account, is by being short one option, being short that unit, you will get hit with some pretty decent margin issues. Okay. But, if that's your target, there's some pretty darn good reward to risk there. Okay. All right. Let's do an Amazon analysis. Okay, Chris, give me an area that you want to get long Amazon. Where do you want to get in Amazon? Rough area, Chris? Okay, 1650. So actually not too far from here, right? You're only talking about like 3%, 2 to 3%. So let's look at, wow, something like this. Okay, massive amount of premium to collect here, but we're dealing with a $1,600 stock, $1,700 stock, so there should be. So you can do this trade maybe for $11, $12, collect $1,200, okay, each time you do this. Where's my risk? You had said 1650, okay. This would put you at downside risk. Okay, this can't be right. What am I doing wrong here? Oh, that's why. I've got March 13th in here. I knew something had to be wrong there. Let me reevaluate that. Okay, so $45 credit. Okay, because we're talking next week, not this week. So you can collect $45 on this. Okay? And let me show you. You wanted to, have a 1650 entry point. You're willing to buy stock there. This gives you an entry point all the way down around 1575. Now, I can adjust this to get to your 1650, but this gives you an entry point of 100 shares of stock around 1575. And you can collect about $45 or $4,500 to do that if you're willing to take that risk. Okay, you got it, Chris? Do you want me to look at different strikes for you? Is everybody following along here? Again, there are massive opportunities out there, guys. If there are stocks that you are not afraid of taking a long position in, there are massive opportunities. Okay, so different strikes with a little bit higher of an entry point, since you had said 1650, and this is really like 1575. So if I adjust the strikes, what it's going to do is give you more of a credit. So here's a $50 credit. And, you know, we're getting closer. This is right about 1590-ish for a $50 credit. Personally, if I was comparing the two, I'd rather have a $45 credit and have another almost $50, you know, of leeway to the downside. But if this is what you want to do, certainly can do it. Okay. All right, Ida, you had given me a price for AMD. Let me go back up here and look at 37-ish, right? So not too far away. We're only talking about 10% away. Not even. Okay. And Ida, what we are looking at right now, and Ida, can you hear me? Tommy, can you hear me? Okay. When you say you're gun shy, again, we are looking at this type of setup specific to basically having a short put position, but having that short put position strategic to where you would absolutely want to buy stock. Okay. John, we're recording this, and there's been some today already, but we're recording this. Okay, so Ida, if you don't, you know, if you're telling me, and I know you said you're gun shy, but if you're telling me if AMD got to 37, you want to buy it. Okay, you want to buy 100 shares of stock, let's say. Let's look at something like this. And there's just not a ton of premium here. So you're probably better off just selling a naked put. But if you were to construct something like this, you could collect about 80 cents. Let me get something to where you're at least collecting $1. Hang on. Okay, so here's something you could collect about $1.30, Ida. So $130, okay, each time you did this. To give you an entry price if the stock went down by next Friday expiration, around 35. So not even 37, but around 35. If you're willing to accept the risk of buying 100 shares of stock at 35, you could put this position on and collect about $1.50. Or, if you don't want to get fancy, I know you said you don't want to sell naked puts, but that's what I would do here. Okay, again, if and only if you want to buy the stock if it gets down there, why not sell the March 35 put for $1.25? Collect $125. And if the stock keeps going down, you get in at 33.75. See what I'm saying? Ida, were you able to follow that? Okay, good. All right, guys, I'm going to take a quick break. I need to get some water. Okay, I will be back in a few. Let me get this recording going for everybody. I'll put it in the room, and then I'll be back. Okay, good, Ida. Good. Yep, John, I got to get it populated up there, but it's no different than it was yesterday.